Hello, I'm Taj Kang, Business Development Director at Contractor Mortgages Made Easy, and this is my blog. What I'll be looking to do on a monthly basis is to examine the upcoming trends in the markets and in the news and the wider economy to see how these will affect contractors and freelancers who are looking to possibly buy their new home in the coming months or possibly rearrange their existing financial commitments around their property. This month I will be looking at the regulations, or the second wave of regulations are coming in this year, and they went live from the 1st of October. The first thing to really examine is a statement that came out from the Council of Mortgage Lenders towards the end of September when they looked at mortgage approvals slowing down, and they speculated that this would have a knock-on effect on house prices in the coming months, and they warned of a potential plateau in these prices. When you examine the reasons that they're giving for this, they talk about the new regulations that came in April this year, and they point to the new regulations that were about to be launched from the start of this month in October, and they speculate that this would probably have a further dampening effect on the housing market. In summary, what it basically means is if you are applying for a mortgage today, the lender will assess you and your new mortgage payment as if it were 3% higher on the rate. So in effect, what the regulator is looking at is confirming that any new borrower can afford the new mortgage even when the interest rates increase. If you're a contractor working via your own limited company in particular, you could be particularly badly affected, as most lenders will define your income via your salary and dividends, meaning that a large part of your overall contract earnings are ignored. It's a good idea if you are a contractor in that situation just to have a look at the page on bespoke underwriting for contractors, because there is a way around this. However, just be wary of approaching your own bank would be my advice, particularly if they don't have any type of contractor criteria they can use to look at all of your contract earnings. The word that I would give to you regarding these changes are they will affect you if you are using traditional routes, but less so if you're using processes like the bespoke underwriting. It's also a good idea to look at how banks have reacted, because banks have lending targets that they're looking to hit by the end of the year. That deadline is fast approaching. The impact of these regulations in April and now in October will have a bit of a slowdown on that lending. So banks will have to do something to shift this money, because while it's sat there in their coffers, it's not making them any money. And what's basically happened is rates have been coming down with certain banks. Other banks have reacted to this, and the long and the short of it is, if you're looking for a mortgage right now, it's a great time to get a very low rate, provided you know you can get through the underwriting hurdles. You do need to understand that when these lending targets are reached by the banks, they will pull their rates at very, very short notice. And what we have found in particular over the last couple of years, since the mortgage market has bounced back, is that lenders tend to tell brokers after they've withdrawn the rate that they've withdrawn it, because they don't want an influx of applications at the 11th hour. As always, please ensure you seek suitable advice regarding your own particular circumstances. I'd just like to say thank you very much for listening, and I will talk to you next month with regards to any further developments in the mortgage press.